Hello everyone, this is the second part of the webinar Traders Toolkit. My name is Stanislav Bernuhov. I'm a full-time trader with over 11 years of experience in trading Forex, futures and CFDs. And today I will be your host. This webinar is provided for you by Exness Company and is dedicated to useful services, software and other tools that can be helpful in the work of a trader. Before we start, let's take a quick look at the disclaimer. Information in this webinar is provided for educational purposes only and by no means can serve as a trading or investment advice. Risk of trading in financial markets can be substantial and you accept full responsibility for any of your trading decisions. Past performance is not a guarantee of future returns. I hope that you remember about risk all the time, and with that we are ready to start. Let's once again remember what tools do we have as a traders. And first of all, it is screening and monitoring services. For example, barchart.com or any other ones, infotry.com, opfind.com. I'm talking about services that I have mentioned in previous webinar, but you can watch it on the Exness YouTube channel. Also, we have news aggregators, news feeds, and any companies that provide information related to markets and maybe data and research, useful software and scripts and indicators. Today we'll start with data and research. Now let's start with the first web service that I want to make review on. It is More Research Center that is available by the link mrci.com. It is a research agency that focuses on seasonal tendencies, on application of seasonal tendencies to trading futures. We are not futures traders, we are Forex traders, but we also can benefit from information that they provide because there are also currency futures. I don't know why seasonal analysis is not so popular among Forex traders, but it is very popular among futures traders and spread traders. Of course, there is much research about futures, including currency futures. As currency traders, as spot currency traders, we can benefit from such information. If you are not familiar with seasonal analysis, I will explain you in a nutshell what it's all about. Now, imagine that we have a market, we have some chart, long-term chart, maybe 5 to 10 years. We have a period of 5 to 10 years. Let's say that we have, I don't know, British pound versus American dollar. I don't know. And we want to know whether January is good for buying or selling or not. What can we do in this case? We analyze every month and see what happens there. First month, for example, market is going higher in, for example, 2000. In 2001, market is going sideways. In 2002, market is going, market is going lower. In 2003, market also is going higher. So you compare this information using out of sample method. For example, you take 5 years of data, you analyze every month, every January, I don't know. Then you take 10 years. Then you take 10 years, and also you analyze information for the period of 10 years. Then you take 15 years and you average information for the 15 years, and you get so-called 5, 10, and 15 year seasonals. What is a seasonal? Seasonal is basically a curve. Is a curve that can be compared with a chart. And if you compare actually 3 curves, you get the idea of what was happening within a period of 5, 10 and 15 years. You compare all those seasonals together and you get the idea of time window opportunities. What do I mean by that? Time window opportunities. For example, if we see that 3 seasonals go simultaneously in one direction, I mean 5-year, 10-year and 15-year seasonal, if they go to one direction, then possibly we have a strong window of opportunities for buying for this asset. When it goes higher, we also can buy. Well, it doesn't mean that it will happen in reality, because sometimes market cannot be ready for this action. Sometimes it may be it may, I don't know, exist under the condition of strong downtrend. But statistically we know that it was happening during the period of 5 years, during the period of 10 years, and during the period of 15 years, maybe 20 to 30. And we know that statistically market is growing in January. I don't know. It may be in February or in March. That's just the stats, that's just statistics. We don't know the reason beyond this price action, but we know that we can employ this statistical edge. It may be statistical edge. It may be not very big, but also if you compare it with your analysis, it may increase the chances of your trade to be successful. And if you take a look at mrci.com, at Moore Research Center, you will see that they provide seasonal analysis. They provide different seasonal studies, charts, and other information. Well, there are also free trades. There are also free trades. If you log into this web service, there are also free trades that you can get for every month. Sometimes they provide trades for currencies. Let me find it for you. Free futures research. Okay, free futures research. Free trades. Well, you can also see intermarket correlations, but let's go to free trades. And you see that there are some history, March free trades, April free trades, and so on and so forth. For example, let's switch to July free trades. And we see here a couple of trades that are that can be executed on cotton and spread between gasoline and crude oil. It's not interesting for us because we are currency traders. What about June? What about June? It's also coffee and soybean meal. It's not interesting for us. As for May, we had opportunity on Euro FX. It is a future for Euro versus American dollar. In other words, if you remember that futures market and forex market, they have similar charts. The chart for Euro versus American dollar is similar to the chart of Euro FX, so we can use this as a free sample of seasonal strategy. What does it mean? What can we see here? We see that 5-year and 15-year seasonal are going simultaneously in one direction. They are going simultaneously in one direction. It means that it is possibly the good idea to sell Euro versus American dollar in May. It doesn't mean that you should sell it blindly without doing any technical analysis. No, it sort of confirms your hypothesis. I want to show you some example that was really interesting. Example dedicated to the trade that I have actually made on my account in January. Okay, January 2016. And we had very strong seasonal window opportunity for January. It's Canadian dollar, okay? Canadian dollar going down in January. It means that we should have bought American dollar versus Canadian dollar. Now let's look what was actually happening on Canadian dollar during this January of 2016. Well, you see that this was pretty nice rally, or I would say it is a very good rally. It was very good rally consisting of possibly only white candlesticks. It was very smooth and good trend, accelerating very quickly, and once market has achieved 1.4555 area, it has reversed. Well, I have generated 500 pips in this point with pretty small risk. Well, the basis for this trade was not only seasonal research, but I was waiting for the timing, for the opportunity to enter the market. And when I've entered mrci.com website, I have got the information that seasonal window starts. Just a minute. Seasonal window starts from I believe it was January 5th and closest January 16th or so. I was thinking that possibly market was not ready to go yet, but when I have got this information about statistics, I have understood that I need to be prepared and to act very quickly. Well, actually, my trade was executed at January 5th here, when the market was trying to break from this small trading range, and I have entered the momentum trade, the position that was ready to be in the market for some period of time, possibly 2 weeks. That's a seasonal window. Now let's talk about Japanese yen. Here we have a chart of American dollar versus Japanese yen, and you might remember from the previous seasonal charts that I was showing you so far that in August we have a tendency for yen to rise starting from the second week of August. In other words, for American dollar versus Japanese yen, tendency has to be pretty much different. It has to be the opposite. The American dollar versus Japanese yen has to fall starting from possibly the second week of August. Oh, sorry about that. I will. Okay, previous year, 2015, August 2015, and you see that we have very massive liquidation break to the downside on American dollar versus Japanese yen. Of course, it is a subject. It is an extreme event caused by Asian stock market. I know that, but fact or statistics is pretty much clear. It shows us that that this move had started during the period of the second part of August. This move had started to go. It is August 19th. It's August 19th. It's not a second week. It's possibly somewhere between the second and third week. Okay. What about 2014? What about 2014? Well, here we don't have any tendency for this currency pair to fall. Well, okay, it doesn't work on 2014. You might remember that we had trends for weakening dollar that we could see on every trading instrument. Euro was falling again. Sorry, not weakening dollar, of course, strengthening dollar. Euro was falling against American dollar. British pound was falling against American dollar, and of course, Japanese yen cannot go higher in such circumstances. As for 2013, we see that. What do we see here? What do we see here? Let's find August. It's September. It's September. Well, we see that market started to go down since the first week of August. Then again we have slight pressure to the downside. Well, it is a range-bound market structure, of course, but it is just an example. We see that sometimes it works, sometimes it doesn't work, but overall statistic will work possibly on your side if you work with seasonal analysis. Of course, seasonal analysis is not a very easy thing. You know that every time, regardless of the market data, every time in a period of 10 years, in the next year, in a year after the next year, it will work in the same way. No, and that's why such services as mrci.com are useful, because they aggregate all the data, they analyze those minor changes in the data, and they tell you whether the seasonal tendency is strong or not, whether you can use it or possibly you would switch to something else. That's why it is more recommended maybe to use web service and use serious analytical research concerning this topic. But even more importantly than that is information that they provide in details. In other words, we have statistics for the years. what could have happened if we buy every time, buy this asset every time in January? Well, we see that we have the distribution of profits here. We could have achieved such kind of result for it is one single contract for Canadian dollar future. So in other words, if we sell Canadian dollar future, or if we buy American dollar versus Canadian dollar, it is equal to one single lot in an MT4 trading platform. We can achieve the results posted here. And you see that we have 13 winners and just 2 losers in a row. Well, not in a row actually, not in a row. The losers are distributed for the whole period of time. For example, there is a losing trade in 2003 and there is a losing trade in 2010. Other months are profitable. Well, it doesn't mean that they tell you exactly where should you place your stop. No, that is your task as a trader. That is a task of your technical analysis. And of course, as a trader, I think that you would not allow such kind of loss, $1,290. You would not allow such kind of loss because you will place a stop loss, you will try to re-enter maybe. In other words, you may try to employ a trend following strategy with a filter, with a directional filter. In other words, you will not accept trades to the sell side, to short trades for American dollar versus Canadian dollar. You will only accept trades to the long side. In other words, you will only buy and you will never sell during that time. I think personally that some such kind of research is very valuable because it not only tells you that okay, go ahead, buy or sell, it shows you the statistics that you could have got if you do this action, or if you generate such action during this period of time. Well, let's get back to Euro versus American dollar, to Euro FX. Euro FX, it was May, previous trades, okay. It was May, I believe, May free trades, okay. May free trades. We had Euro versus American dollar, and you may notice that we don't have very much trades here. First was in January. The second is in May. In May, 4 months left, okay. The second was in May, but it is very strong time window opportunity. It's very strong opportunity, and they don't appear very frequently. But you also can take advantage of those opportunities. Well, what would I advise if you are interested in getting more information? You can subscribe to MRCI online web service. I was subscribed to this web service some time ago when I was trading commodities. Well, it was very useful. Well, as a forex trader, as a currency trader, you might be interested in, I don't know, in something like currency research. They also have such kind of research. You can browse this website and find something useful for you. Let's get back to the presentation and try to understand what kind of tools can we have as a traders. Well, I've started with seasonal research and seasonal analysis, services for seasonal analysis. Well, besides, I have a couple of charts here, and this video is recorded in July 2016. And for example, if we take a look at the current opportunities, we may also see that we have this opportunity for the British pound in August. The British pound in August, okay. So you see that window opportunity starts with the first week of August and ends at the third week of August. Well, it doesn't automatically mean that British pound will go down, but concerning the weakness of British pound, concerning Brexit, concerning the fact that it stands in a trading range, For elongated period of time, it can break this trading range to the downside, and it may be August. So we'll see what is happening. I know just statistics. I know that statistically in August we have three seasonal curves. One is 5-year curve, the second is 10-year curve, and the third one is 15-year curve. They all go down simultaneously in one direction. So we have window of opportunities. What do we have also? Well, for the euro versus American dollar, it is not so obvious because two curves are going down, one curve is going sideways. I would not say that it is very strong opportunity. Well, as for Japanese yen, for example, here you see the example of chart for futures for the yen. It is not American dollar versus Japanese yen. It is actually Japanese yen versus American dollar. So we have to reverse this chart. What do we have in August? In August we have rising yen. In other words, falling American dollar versus Japanese yen. It is also an opportunity for trading. Well, if we take a look at British pound again, we see that we have time window opportunity for the August. But let's not believe anything. Let's check everything. Let's test everything. Well, okay, let's try to test. Let's take the previous year, which is 2015, and try to figure out what was happening during the August at that time. The research that I've shown you doesn't include previous 3 years, I believe, so it was published in 2013 or so. I don't remember exactly, but it doesn't matter because statistics is repeated over time. Well, for 2015, if we take a look at the chart, and for 2015 we didn't have possibly this strong tendency. We didn't have the strong tendency. Market has gone lower possibly for 1 week. It's not a big deal, I believe. So market was sideways. It was not trending. It has become trending in the last week of August. Okay, so in August it has worked for the first week, but later it seems that it was not working so well. What about 2014? If we take a look at this month, we see that. What do we see here? We see that market starts to fall during the August 1st, and it continues to go lower until the end of the month. Well, of course we are dealing with a trend here. The reversal of the trend has started here. But if you are searching for a short position, you may support your technical view with a seasonal tendency that may act as a confirmation for your hypothesis. If you want to go short, you may have a confirmation for your hypothesis, and at the opposite, if you, for example, start searching for an entry point to go long, you may filter this trade because you say, okay, I'm having a very strong seasonal tendency of market going down. Do I have to buy here? And you may cancel your buying trade at least. If you don't believe in bearish market, you can at least avoid going long right here, right now. Maybe you will wait for some period of time, and then you will enter a long trade. Okay, what about 2013? What about 2013? And if we take a look at this month, it is okay. For 2013, we haven't had any tendency, any bearish tendency here. We haven't had any bearish tendency. But as I have said, it's not a holy grail. It is a way to organize the data and a way to capture important statistics. It doesn't mean that it will happen every month. I mean every August, for example, in the period of 10 years. Well, I may be not right about the exact point for entry and exact point for exit, because information can be changed. It changes all the time. Information comes from the market all the time, and possibly my data, my research that I have shown you so far may be not so so correct, maybe not so correct like it is shown on mrci.com web service. I can register that when I was analyzing seasonal tendencies for Canadian dollar, I was thinking that price action can start possibly somewhere in the middle of the sorry, for in the middle of the month. But according to free trades of mrci.com, I should have started to enter the position somewhere earlier, maybe in first dates of January, and it was absolutely correct. And also, if you are interested in seasonal analysis, I personally advise you to watch the blog of Kathleen.com. Kathleen and Boris Schlossberg are renowned experts in the field of forex trading, and sometimes they post some interesting information concerning seasonal analysis. For example, forex June seasonality, negative dollar bias. Well, we have a post here by British pound, negative dollar bias, and we see some research concerning seasonal trending activity. And also here we have an explanation. They put this information in a context which is very useful in my opinion. So sometimes they post this information, and you can use this, you know, as a source of analytical ideas, as a source of inspiration, maybe, if you want to employ this kind of analysis. And also there are many useful articles as well that you can read. In the next webinar we will talk about open interest and volume. Well, I don't want to mix these topics together, that's why I will make a review on open interest and volume in the next webinar, because it's very separate topic and it's pretty big topic. Well, today we were talking about seasonal analysis and application of seasonal charts to your trading and mrci.com web service. And if you are interested in, you can log in there and try to analyze their free trades. Well, you may even analyze free trades for previous months or previous years, because they repeat over time. Seasonal tendencies are repeated over time, and that's why they are pretty reliable, and you can use them as one of the sources of data for your trades, for your trading ideas. Okay, with that we are finishing this video. See you in the next video, in the part 3, Traders Toolkit part 3. We will talk about open interest and volume and application of them to your analysis, to your trading. Thank you for your attention. This webinar was prepared by Stanislav Bernohov, which is me, and Exness Company. Keep in touch and good luck.